the S&P 500, the Nasdaq 100. And as we look at this chart, as we look at what's happening here in the market, we are at that breaking point. We are at the level that is either bounce or die territory. We look at Nasdaq specifically back down at 14.6 roughly. This is where we bounced essentially for 5 days roughly last time, until ultimately we bounce back into 15.4, in which we rejected off that major level. You know, we go into something like ES. We look at what's happening here, how we're moving, right? We came back into kind of that retest level. We rejected again the 44.25 range, rejecting back down at lows now. Now, the last line of support, right, that I've been watching is the 200 daily SMA right there on SPY. And come, to the end of the day, go to the 15-minute chart. As you can see, the last 30 minutes, we're breaking below this level. Not what we wanted to see, right? This is not where we wanted to be. Now, what I will say is that, we're going to see if we break down from this level, right? This 420 range. Now, what I will say going from here also too is, you got that key level around 418, right? You got that key level we need to be watching. And I'm going to tell you everything in between they need to be paying attention to. But before we do that, I have to ask you to do two things. Consider liking and subscribing. It helps out tremendously. Every single day we post videos so you are prepared in the market. Also, too, the newsletter link is down below. It's 100% free. But like we said here, okay, reaching 44.26 would make 44.72 the next significant level and break us out of the trend, right? But then watching where we're going back to the downside, the 200 SMA, everything in between here, Nasdaq, right? We had all those levels mentioned out. You have everything in here, right? 42.60, 42.73. Well, where did we end this week on ES, right? Right near that 42.60, right? We just stayed there for the bulk of the day until the last, 5-20 minutes. Okay. Newsletter every single week, Sunday, it's there. So make sure you subscribe. Again, the link is down below. It's 100% free. Comes out of my pocket. The Discord link is down below as well if you want to see how we're trading, why we're trading, scalps, swings, everything in between there as well. But again, we have a lot of free content that will subdue your, kind of do the trick. If you are new here, we never want you to feel like you need to pay for content. But again, if you do want to get that next level, it is there for you. Okay. So let's get back into where we're at. Now, you see the levels mentioned here, and that brings me into my next subject. And before we go any further, I want to give a special shout out to the sponsor of this video and a new sponsor of the channel, Chart Prime. But what if I could tell you now we have something in a tool that's going to be able to give you all of our key levels, or a little bit of a cheat sheet going into these as well. And then also breaking down massive levels you need to be watching for buyers and sellers in between the charts. Or what if you can also go into your chart, quickly identify the patterns that are there, whether it be broadening wedges, head and shoulders, double tops, or anything along those lines. And one thing that you guys know is that I'm never going to stand behind a product that I wouldn't use myself. That's why every single day I am officially going to be using Chart Prime and these specific indicators to help us on the live streams and in the daily videos to make charting quicker, faster, and of course giving us advantage to see things that we may have missed that AI will no longer be missing. And this is just one chart. If you're interested, the link will be down below, and if you use our code, you'll get 30% off every single month. Make sure you check them out. And if you have questions, feel free to comment down below. Let's get back to the video. So the first things I want to mention before we jump into anything, right? We came to most of these levels. We're rejecting off them, coming back and testing. But before we go too far, I want to jump into DXY and into oil. We look at DXY, the dollar in particular. Now, we've been range bound. We've talked about the top of the range, 107.2, into the low of the range, 105.8. Range bound back and forth, and we're kind of just like sitting here, really weak, right? Worth mentioning, even despite the strength, the weakness in the market, the dollar remains relatively weak here. We zoom down a little bit further, we go into oil, we've seen that range as well. Very shockingly similar charts here, right? We're basically range bound in between 82 and 92 roughly, back and forth, kind of playing ping pong here. Oil is trying to shapen up, it's trying to strengthen, and we're just in the middle of that range. But the one thing that I will say, the underlying tone of what's been sparking oil to bounce over the past week or so has been what's happening in the Middle East. Now, what I will say, and again, I'm not going to say that we're going to, abandon Israel or anything like that. I'm not here to talk politics, okay? I'm here to just talk about what's happening news-wise, okay? Now, we've seen America, they're getting hostages released out of Hamas and out of Gaza, etc. That's overall good news. Okay. We saw the market react really well once that news was released. Okay. Now, from that point, this gives me, right, This gives me the logic of potentially, okay, again, you're seeing countries want America to stay out of this, right? You're seeing them kind of, not bowing down to America here, but trying to keep them happy to keep them out. That's the only reason why I would assume that they'd be releasing these hostages here based on what they're doing, right? So watching what's happening here, for oil to get really volatile to the upside, in my opinion, things have to escalate higher, right? Iran has to get involved, etc. And I just don't have the answers that's going to happen just yet, but you're still in that range. That's where we're at, and that's kind of how we're moving. You also can look at the 2-year yield coming down in the day, the 5-year yield coming down in the day, 10-year yield down in the day, 30-year somewhat down in the day, right? So in comparison, they all are pulling back from yesterday's levels like we mentioned as well there. Okay, but we know the yields, we know the dollar, those are lagging indicators. That's just, those are things that we need to be watching right now, things to keep on your radar. Now, the other big areas that I'm watching, right? We mentioned IWM. We mentioned the potential double bottom you had here. You got back to the top, rejected, came back down. IWM, we go to something like in the Russell, just so you know, you're breaking back below levels that we haven't seen since 2022. You haven't been at these low levels on the IWM since last October, okay? Very important we understand this. Next line of defense here, around 162. Not good that you're just free falling here. Bad news. This is a risk off indicator, right? No risk wants to be involved here. And we're kind of see it playing out into other areas of the market. We talked about tech holding up, but I think we're starting to see a little bit of the countermeasures there. We go and look at semiconductors and NVIDIA specifically. Clear head and shoulders playing out here. Now, the main question, and if you're looking to play this head and shoulders, right, you would like to see a break, retest, and then break to the downside. That's what you would like to see. So the question now is, do we get the break of around 405, 407 and start pushing to the downside? And then do we get that retest? Okay. So again, that's what I'm saying. The more we look at these charts, the more we realize you're at that bounce or die territory. Not good, right? Not excited about this by any means, but we'll take the downside if it comes, right? We'll have the opportunities. And like I'm saying here with NVIDIA, you break and retest, it's a great downside trade opportunity. You'll probably make a lot of money. You have that gap all the way down to locally 320. You have the next major level around 350, the prime level, right? We have the 200 SMA down there as well, all lining up kind of for this perfect storm. Okay. And then the laundry list kind of goes on. LRCX, we're going to see more of these chip names, right? You start breaking below 600, a lot of pain. Okay. AVGO, you start breaking back down. Now we got more room to go here. You need to get below 800, but a lot of pain potentially. Okay, so a lot of these are at massive levels. Apple too, more tech names here. We mentioned today under 174, it's a short opportunity. You got back below 174, and not looking strong so far. Okay, now what I do want to say before you jump the gun on anything coming out of this weekend, going into Monday, etc. Right? I think we need to be a little bit patient here and make sure that we're holding below the 200 SMA. Now I will say what we had today was pretty brutal. 2 testing of it and then breaking down in the day seems pretty likely. You would love to see the retest of this level though for a perfect opportunity. So you'd like to see that extend, and then you'd like to see the break, retest, and the continuation. That's the most ideal trade you'd be looking for, and that's what I'd be looking for going into next week as well. But again, we zoom out to something like Qs. You go to something like the 4-hour, you zoom out, you can still see, you're at that major support line, right? This is it. This is end all be all. You got to bounce here, bounce or die territory. You're going to keep hearing me say it, right? We start losing, 350, 351, it's a lot of downside opportunity into 340, 337, give or take, right? And so, this is that territory of where you start to make money on the breakout, to the downside, right? We've been talking about, you don't really love the chop, but you break out of this, a lot of money to be made. Okay. I can go on a laundry list, like I said, of these names. A lot of these names looking very weak. Tesla, again, one of those names as well, getting below the 200 SMA, below the major support line, below 218. A lot of these levels we mentioned, right? So again, weakness is kind of the thesis that we're seeing right now. We go into volume, right? Give you a little bit of a refresh. What's happening here on volume? Past 2 trading days. Yesterday we had 121 million, right? Got to come back into that. I don't know why. That did that. We'll go back into SPY, pull it up, historical data, go to volume. Yesterday, 120, another 122 million day here. Weakness, weakness, weakness. And this is not what you want to see if you're a bull, right? You're seeing continuation. We're seeing volume follow through. This is the signs of potentially a breakout that we could be seeing here. Okay. Now, what you would like to see, and the only thing that's deterring me or that's making me say, maybe a bounce could be in the works here, right? We've seen what the Fed has said. The Fed has had a pretty good stance on what's happening with inflation, that it's moving the direction they want it to. It's not, they can't confirm it yet. They need more data, but it's moving in the direction they want it to. The dollar has, in the short term, reached the top, right? It's showing some weakness. You'd like to see more downside here, right? And then, of course, oil sitting in this range. But again, I don't think oil is the good indicator whatsoever, okay? And then the last thing I would say is VIX. But VIX, this is a bearish indicator being above 20. You're looking for 24. Above 24, we could see fireworks to the downside, okay? So we've given you a broad viewpoint so far of the market. You should have a complete understanding of how we're looking at this, how we're looking to attack this, and overall the weak areas of the market, right? But the key sign for continuation is what? Holding below 200 SMA, number one. Number two, Q's breaking below these lows here, right? Getting below 352, 353 roughly, start pushing back down, or going into Nasdaq, holding below 14.6, right? That's your key sign there, pushing into 14.4, 14.2 next. But those are your areas you need to be watching. Everything else so far has been giving you the confirmation, okay? So again, as much as we like the bull side, as much as we want to get that bull side, we never got the mount of 15.4. We never got the mount on ES as well of, 44.25. We didn't get those levels, right? And that's what gives us the sign to go long. And we just did not get those signs just yet. Okay, so understand where we're at, how we're moving, and that should make a little bit of sense so far. Okay, now again, I don't want to go over too much equities here. I want to see how we open up Monday before I start jumping the gun, or on Sunday, I'll give you a little bit of a rundown of names I'm liking so far. But ultimately, that's what I'm covering today. That's all I want to talk about right now. I'm still waiting on this news. And again, it's important to realize these weekends right now, I think anything can come out of these weekends. We have no idea. Once Israel starts taking that, the advance into Gaza, in my opinion, the only reason why they haven't done it right now is because America's asked them to wait until the hostage situation has been resolved. But once they make that next step, that's the next level of escalation. And that's really what I think the market's waiting on. Because if other countries get involved, and it's looking heavily like they will get involved, it seems like another volatile spike could be coming quickly to the downside, though. So those are areas we're watching. That's my viewpoint of the market. If you have questions, comment down below. Video will be coming out Sunday, giving you a longer viewpoint, things that we're watching in the news, things to be looking out for, and hopefully some equities as well. Have a good one, traders.